Chris, we're going to go back to you. This data, this high-frequency data that we get from the Fed, your reaction to it, how closely are you watching it, and how does it set us up for bank earnings and the focus on the balance sheets?
We're watching it every week. And I think the big takeaway that people should have from these numbers is that overall, most of the deposits that are in the banking system are there for a reason. And that's especially true with the big banks, right? Like Silicon Valley, in some ways, was a place where companies parked money. The big banks like JP Morgan and Wells Fargo and B of A, they don't want companies to just park money with them. You know, what they want is the operating accounts that's tied into a company's payroll and paying their suppliers and all that. That's kind of what they get nice sticky deposits for. And so far, what you're seeing with the big banks is really stability in their deposit bases. Okay. And I think that's the big takeaway, and that's a good news for most of the banks.
So, Chris, tell us about this bank that's too cheap to resist.
Oh, you mean Citi? Yeah, I mean, I think, you know, if you're a regular investor who is thinking like, oh, maybe the banks got oversold and I should, you know, participate in a rebound, they're quite honestly the names I'd advise you to get involved with for that are Bank of America and U.S. Bank. You know, big, broad-based banks with huge deposit bases, and they've been sold off with the rest. You know, the one that's really too cheap to resist is Citibank. And, you know, they have been chronic under-earners. But it's, you know, they've chronically earned like 7, 8, 9% returns on equity when everybody else is earning 12, 13, 14, 15. And so it's been chronically under-earning. But on the other hand, you know, it's trading barely above half of tangible book, and they have been buying back stock year in, year out. So, you know, over the last 6, 7 years, they've been able to reduce their share count by over a third. Okay. And, you know, the bet is that at some point they get their act together and they can get their returns closer to the peer average, and you'll have that value spread out over a lot fewer shares.
Okay. So quickly, Chris, we also get PNC reporting tomorrow. How does that set the stage for the regional results we're going to be getting in the coming days and coming weeks?
Yeah, that will be the biggest bellwether, though B of A and Wells Fargo also are very much regionals. Again, you're going to want to see, and I think with PNC, they had been very vocal about the fact that they didn't care so much about their tangible common equity ratios and that they were going to continue to buy back stock. That was their, you know, mantra through the fourth quarter. You know, we'll see if they moderate that. I would expect them to. You know, and I think, though, you'll see their numbers probably firmly in the big bank category, meaning modest deposit runoff maybe, but kind of to be expected. Okay. And again, just to put all that into context, you know, when the Fed ballooned its balance sheet, it ballooned its balance sheet by $4.8 trillion. Guess what happened to bank deposits? They went up by $4.7 trillion over the same time period. And it's only natural that some of that was going to roll out of the banking system, you know, inevitably. But so far, you know, of that $4.8 trillion, probably, you know, less than $1 trillion has actually rolled off.